Coming to you live from Larry's Inner Circle in Lake Wiley, South Carolina, the Goins Group is proud to present to you today's episode of Invest in Yourself. We're going to be talking seller financing. And we've got Paul Olson here along with your host, Larry Goins.
What's up, what's up, what's up? How's everybody doing out there in internet land? So I've got the man, the legend, and the myth live here in person, Paul Olson.
Reasonable facsimile thereof, or something like that.
There you go. The relational technologist. When Todd was doing the intro, I was telling Paul, I said, I came this close to wearing my Pokemon shirt because I knew he would be wearing some kind of a superhero cartoon type shirt. So that's kind of your everyday attire, right?
It is. I just got to keep, young at heart that way.
And a Harley shirt is my everyday attire. So, but how you been, Paul?
Been good. Staying busy, but good.
Really?
Real estate market's keeping us busy.
So what are you working on right now?
We're doing a lot of owner finance, working on a lot of stuff like that. Also doing some personal investing on the side. So
that's cool.
Yeah.
So yeah, we've kind of moved our model. Our model has shifted. We used to do a lot of wholesaling and a few seller finance. The market has turned. We're doing a lot more seller finance, a little bit of wholesaling. But in fact, we have two closings this week. We have one in Tennessee and one in is it Alabama or where's he at? It's Wilson, North Carolina.
Wilson, North Carolina. That's
Wilson,
right.
North Carolina, and then one in Memphis, Tennessee.
That's right.
So so we're just rocking and rolling, and you're doing some stuff on your own too.
Some stuff on my own.
You got an awesome fix and flip. Tell us about that.
I do. I got a house actually here in Charlotte that literally just kind of landed in my lap. Just all about having the right connections, the right people, the right place, at the right time. Picked it up. I think my all-in on it's going to be right around 129, something like that.
So around 130.
130. When I originally picked it up, it was a little bit of a gamble because the comps in the neighborhood were around the 150 to 165, something like that. But I was the biggest house in the neighborhood. I have half an acre of land, whereas all the rest of the lots in the land are like a third of an acre or less. One of the bigger, I think the other comps are like 1,300 square foot or lower, something like that. And I'm 1533.
Wow.
It's an older neighborhood. It's built in the 50s and 60s, but it's a new, hot, up-and-coming area.
Great.
Perfect market. All the comps days on market were 5 days, 6 days, 9 days on market. Full asking offer. Wow. So even with the gamble, I still had money to make, even if it's like $20,000. But since I picked up the house, there have been more properties that have popped up, and each one has gone for more than the last.
Oh, so the comps are getting higher.
So they're getting higher and higher,
That's
and
good.
they're getting the appraisals in there. So when I picked this up 2.5 weeks ago, we were thinking maybe like a 165 ARV. Then about a week later, we're looking at maybe like a 177. There's a new one that just went that if it does get the appraisal for, and I'm paying attention to the agent to see if it does go based on price per square foot, they'll put my house at 210.
What?
Yeah.
That's awesome, man. Congratulations.
So it's being all about the right place, right time. We're doing it right. We're putting $40,000 in rehab into it. But, I've got about 2 more weeks left on the rehab, and I'm just waiting to see if that 177 comes through, because if so, I've got a 200K house on my hands.
That's awesome. And you got about 130 in it.
Exactly. So it'll be a nice day.
That's sweet. That's good. Even with paying for, like if you use hard money,
Mm-hmm.
paying the realtor commission, 6%, that's $12,000 off the top.
Oh, yeah.
You still got plenty of money left.
Oh, totally. And it's one of those I'm doing along with Bill and Wendy, and they've been great and helpful for me on all that whole stuff too.
That's cool.
And there's money to be made even doing the hard money loan. There really is.
That's awesome.
That's
That's really good. Congratulations.
Thank you.
That's
Thank
cool.
you.
That's a lot of the people who work here in our office, they work with us, but they also do deals on their own. And that's one of Paul's deals that he's doing on his own. Not his first, won't be his last.
Yep.
So we want to talk to you about seller financing. Many of you have my training program, filthyriches.com. So Filthy Riches talks about buying dirt cheap houses, selling them for 3 to 6 times what you paid for them with seller financing, where you can get some huge returns on your money. We do webinars over there at filthyriches.com all the time, and you can get some information about that. There's a 7-part video series. But anyway, that's we're moving more to doing more seller financing, because what we have found is we can actually make more money than wholesaling by selling a property with seller financing. But the best part is we're able to pay more for it than if we're wholesaling it. For example, a wholesale deal, it might be listed for $35,000. Well, we may need to pay $15,000 or $20,000 for that property if we're going to wholesale it for $20,000 to $25,000 or whatever, and or $25,000 to $30,000, something like that. Even though it's listed for $35,000, because we've got to buy it deep enough so we can add some to it. Our buyer fixes it up, and then they have plenty of spread, like in Paul's fix and flip, to be able to turn around and fix and flip it. Well, what we found is we could take that same house that's listed for $35,000, and we could pay $30,000 for it, and turn around and sell that house for say $69,900, and get, let's just say we only get $5,000 down on a $70,000 house. That's not unrealistic at all. We just got $5,000 down on a house that we paid $14,450, and I think Paul's going to tell you about that deal. But say we paid $30,000 for it, which was $5,000 less than list. We turn around and sell it for $69,900. We get $5,000 down. We finance $64,900. That payment's going to be around $583 a month. We finance them for 9% for 20 years. I could turn around and sell that paper, that 20-year note. I could turn around and sell that thing for $45,000, and that's a 15% yield to my note buyer. Now let's do the math. I'm in it for $30,000. I got $5,000 down, so now I'm in it for $25,000. I can sell my note for $45,000. I just made $20,000 on a property I didn't even touch.
Exactly.
Now, I had to sell it twice, okay? I have to sell it to my seller finance buyer, and then I have to sell the note to a passive investor. But still, I made $20,000 on that one property, and the key is I didn't touch it. I didn't touch it. Now, a couple of things that you need for properties like this for it to work. It's got to be livable, okay? Especially in the higher price. Now, with my Filthy Riches model, the Filthy Riches model, I've done deals as cheap as a couple thousand, as high as, $30,000, all right? So, but with the Filthy Riches model, if you're paying, $4,000, $5,000, $6,000, $7,000, $10,000 for a property, you expect there's gonna need to be some work, okay? Even before the person moves in. However, when you're paying $30,000 for a house, you can get houses that are livable. I mean, move-in ready, right, Paul?
Carpet and paint.
Yeah, if that.
Yep.
If that. I mean, we've had some that had hardwood floors throughout. Yep. They're livable. They're move-in ready, and people go out there and they're looking at these houses, going, "Wow, I can move in right away." And all I got to do is put $5,000 down.
Yep.
We just did a deal where it was a house that we paid. Well, I'm gonna let Paul tell them about that deal that we did up in
Jonesville. Yeah. Just right outside of Wilkesboro, the suburbs of Wilkesboro.
North Carolina.
North Carolina, the big old town of Wilkesboro, up in the mountains. We actually got a HUD house, and it was a double wide, 1999 build, 2,300 square foot, but it was a 5-bedroom, 3-bath.
What?
Yeah, it was a big one. And it was near the local school, so it was near the families where they want to be, that kind of thing. It was almost on an acre. The house on the left was a single wide. The house behind it was a single wide, but that was it. Outside of that is country area, rural, but still the house was in good condition. On the outside, the inside, give you an idea, there's actually holes in the wall on this one.
Wow.
Yeah. There was actually holes in the wall. Some of the subfloor where the center of the trailer came together, it was actually a little bit stinky, a little bit soft. Countertops needed to be replaced because they were chipped and cracked. Needed some paint and carpet.
Right.
But we picked this up, I think it was listed for right around 35, 30, something like that. We picked it up for $14.95, somewhere around in there. Now that we went ahead and put it out there for owner financing, we were able to get somebody to take the house as is, not us doing a single bit of work, for $75,000.
Now, what did the comps come in? Like if the house was fixed up, ready to go, where were the comps?
The comps fixed up and ready to go were right around 88 or 85 to $90,000. So we were still below what the market value is. So really, if the person, when they go to do the work, they're going to be right there at what the retail market value is on that property.
There you go.
So we're still within reason for what's going on in the neighborhood.
And we sold it for 75.
We sold it for 75, 5,000 down. So all we had in that property was $10,000.
Check it out. We had $10,000 in that property. Now, what we did after that, we went in and sold that note.
Mm-hmm.
We sold that note for $40,000. Well, actually, I think it was $38,000 is what we ended up selling that note for. Okay, and we took a little bit more of a discount on it, even though we had a $70,000 note. We only sold it for $38,000, and which was actually a 20% yield to our note buyer. Now, guys, don't get too excited because all of our yields are 20%. Okay? Most of them are 10 to 12, sometimes 15%. Okay, and we even sell partials as well.
Mm-hmm.
So we sold that note for $38,000. But if we had $10,000 in it, 38 minus 10, we made $28,000 on a double wide in a rural area. Now, yes, it needed a little bit of work. It had a few holes in the walls, needed some countertop, and had some weak spots in the floor. But outside of that, that thing was ready to go.
Exactly.
And the guy was a handyman. He's going to move in there. He's going to do the work, fix it up, get it going, and he'll have a house worth between $80,000 and $90,000. Okay, and it was a great deal for the note buyer because they get a passive income of, it was like $600 and some a month coming in for the next 15 or 20 years. I can't remember if we did 15 or 20, but on that one. But it was a great deal for the note buyer, is a great deal for the house buyer, and we sold that deal on a land contract. Okay, and it was a great deal for us because we made $28,000 on it and we didn't touch it. Now, another thing I want to share with you is we had some other people go out and look at that property. You remember that one lady that called in? She said, "I can't believe you're trying to sell this house for $75,000. It's got some holes in the wall. It's got some weak spots in the floor. You know, the countertop could use replacing. I can't believe that." Well, it's just all a matter of opinion. Mm-hmm. I mean, this lady, she left and she called back complaining, and I happened to be the one that answered the phone, and I got an earful. And here I am telling these guys, what's up with this? This house is not even livable. I got this lady here complaining about it. The very next person that called in, they were thrilled. Yeah, I got $5,000 to put down. I'll pay $75,000. Yeah, I can handle $600 or whatever it was a month. Mm-hmm. And we sold that house just like that. Didn't even touch it. We never saw it. You never saw it. Only the buyers saw it. Okay, and it was a HUD house. And my VA in Pakistan, he's the one that made the offer on the house. Okay, mm-hmm. So that's just one prime example of a seller finance deal. And guys, we get these deals all the time. That's the majority of the deals that we're doing right now. Okay, we're buying, we're selling, we're paying closer to list to the property, but we're being very selective in the types of properties that we're buying. We want to make sure that the property is livable. Okay, it's livable, it's ready to go. In fact, I've got some buying criteria that we make sure about the house. Here's my buying criteria. Basically, it's got to be at least a 3.2. Okay, I will take a 3.1.5 if it's like a brick ranch house, and I do like ranches, but I also like double wides. More on that in just a minute. But I want at least 1,000 square feet. Okay, at least 1,000. I like a lot more than that, but at least 1,000 square feet. No, none of these bungalows, none of these old houses. I don't even want to buy houses that are older than me. If it was built before 1960, I'm going to do a lot more due diligence. Okay, that's when I was born. So I love double wides. Okay, here's why I love double wides. Number one, you can buy a nice double wide. Okay, 3-bedroom, 2-bath, acre of land, 1,600 square feet or more. Okay, a nice porch, deck, whatever, out in the country. It doesn't even have to be rural, but out of the city. And I can pick them up for $15,000, $20,000, $30,000, $40,000, even $50,000, and I can turn around and sell those for $50,000, $60,000, $70,000, $80,000, $90,000 with seller financing. And then when I sell the notes, I can sell either a partial or a full. If I sell the partial, the investor's going to be in it at about maybe $25,000 or $30,000. but it's a great deal for the investor because even though I sold the property at maybe 70 or 80, 90,000, the investor's only in it at about 30, which is about what I got in the property. And they're getting a great passive return on their money, 8, 10, 12, sometimes 15% return on their money. And then I get the back end.
Right.
If there's 20 years on the loan, I can sell the first 5 years worth of it at a 12% return. And then after 5 years, I got another 15 years coming in and I got nothing in the deal. It's win-win for everybody, right?
Totally. You know, the way I look at it, especially with the double wides, I like to follow smart money. When I see smart money buying something, I want to follow them.
That's really
You know
good.
who one of the biggest owners of double wide is? In the
I
country?
do, but tell us.
It's Berkshire Hathaway.
That's
The
right.
old Warren Buffett.
Warren
He
Buffett.
is, buying these things up like crazy.
He owns more mobile homes than anybody else in the country, in the world. That's him, Berkshire Hathaway.
And I like to follow him with smart money. He's a smart man, and he knows what he's doing with his money.
That's absolutely right. That's absolutely right. Is there another deal that we were going to talk about? Do we have another example?
well, you mentioned of it. Let's talk about this one real quick.
Okay.
You mentioned Wilson, that's closing this week.
Yeah.
There's a story on this one you probably don't even know yet.
Maybe.
So this is one that we picked up. It's a FSBO deal. This is one that actually I think you put out some Craigslist ads yourself personally just to see what happened.
I did.
And called in. This one actually did not match your criteria. It was a 2-bedroom, 1-bath, less than 12,000 square foot.
That's true. That's true.
But it was a FSBO, so we weren't having to really put any money out or anything like that.
Yeah,
So
like a $50 deposit.
exactly. So we just figured out and see what happened. Do you know who's actually buying that house?
You know what? I actually I need to tell me.
It's so funny because the person buying this house is actually the owner's daughter. She's been trying to buy this house from the owner for years and years and years, but he's refused to sell it to her. And when she found out that it was actually for sale, she came in, found us,
Called off our sign.
called off of our signs, is actually putting in a deposit, is actually she's actually paying cash for this property.
She is. We were
She's
going to
paying-
sell her finance.
She's paying cash for it. She's going to fix it up and turn it into a place for some of her family members to live in.
That's awesome. And I don't know why she didn't want her dad knowing that she was buying it, but she didn't want her dad knowing because he wouldn't sell it to her for some reason. I don't know. But she told us about that after she signed the contract. Yeah, I'm actually his daughter, But it was just kind of crazy.
It's funny. It's one of those that she went back and forth as to whether she's going to own financing or not. She finally had to do cash. And that's the thing is with us sometimes, we'll offer, if they have the cash and they can pay and give us a good amount, we can go ahead and do that right there on the spot.
That's right. That's right.
But, yeah.
And this property, it's a 2-bedroom, 1-bath brick house on a corner lot in Wilson, North Carolina. And it's with an individual, so the contract's assignable, this, that, whatever. I'm actually doing that deal in my HSA, my health savings account.
Yeah.
And with my HSA, I only have $500 in there. Okay. I only put $500 in there at the beginning of the year, and I could use that to pay my deductible for my health care. And once I reach my deductible, then the insurance pays. But I have a high deductible, $10,800 a year. So with that deal, we paid $16 for it. And we're selling it for, it's either 25 or 26. Do you know?
I think it's 26. I think we're getting 10K split on it.
I think we're getting a $10,000 profit on it, but we had it for sale with owner financing for $39,900. That's what we were going to sell it for, $39,900. And the girl was going to put around 15 down, but because it's in my HSA and I didn't have the rest of the money to close on it, then we asked her if she had cash, and she said, yes, I've got some cash. So how much do you have? We ended up just selling it to her at cash. So that way I can cash out, get the 10 grand, put it in there for my HSA, and now I got the money to meet my deductible. And I have one more deal right now going on in Alabama that I'm doing the same thing with in my HSA.
Yep.
But guys, you never know if you don't ask. You never know if you don't ask. And even though it was a 2-bedroom house, okay, even though it was just a little 2-bedroom house, it was a nice house, decent house in a decent area, brick ranch house. They had a lot of pictures. It only cost us $50 to go in there and take a look at it and get it under contract to see what we can do. And we end up making 10 grand on it.
Yep.
So that was a really, really good example.
It was. It's one of those, we could have gone either way. And she was actually looking at doing the financing side to it, but she wound up with the cash.
That's right. She just wanted to own it free and clear.
Exactly. So
There
you just
you
got to
go.
look at these deals from multiple options.
You just never know. You got to get out there and work the deal. In fact, just real quick, I got a deal I'm doing right now. The lady called me back. I ran some Craigslist ads, and the lady, been working this lady since June. She called me back yesterday. She said, yes, I will take your offer. And I had offered her $23,000 for a nice double wide on an acre of land. She's living in it right now, so I know it's decent. She said, and every time I would call her, no, I think I got it sold. I think I got it sold. I got somebody that wants to put 15 down and they're trying to get the balance from somebody else. So I just literally got off the phone with her and with the person who wanted to put the 15 down. She's selling it to me for 23. Actually, I got that renegotiated down to 21. So I'm paying 21. She sent me the buyer that's putting 15 down, and they're paying $40,000 and going to put 15 down. So I got my seller and my buyer. I don't think you knew about this deal.
I overheard actually.
You heard me in there
desk.
talking a little while
I heard you.
So I got my buyer. Actually, they said, you know, the house does need a little bit. It needs this. It needs that. So I let them drop that down payment down to 10,000. So I got 21 in it. 10 minus 10,000. I got 11 in it, and they're going to be paying me, you know, $400 or $500 a month, and I'm doing that one in my IRA. So we're sending out a contract on that one today. So my seller literally brought me my buyer. I don't have to do any marketing or anything for that deal. So you just never know. You got to get out there and get involved. So we're going to take a quick break, and we're going to come back in a minute with Bill Fairman, the man, the legend, and the myth, the real estate financing entrepreneurial mogul himself, live and in person. So stay tuned. We'll be right back after these messages.
Larry Goins is coming to Houston, Texas for our next 3-day training event. It is 3 days of intense training with Larry and our team of professional investors. Learn the same strategies we use in our investment business every single day. The industry is constantly changing, but Larry has your back with the latest on the markets and what you need to do to take advantage of it. This 3-day training event is free for all owners of Larry's real estate courses, including the Ultimate Buying and Selling Machine, Filthy Riches, Real Estate Day Trading Jumpstart, and the Bid Blaster. You can find out more by calling 803-831-2858 or by visiting LarryGoinsLive.com. Not a student? It's not a problem. Call one of our business advisors today, like we said, at 803-831-2858 to see how you can attend our next 3-day training event live in Houston, Texas.
Hello, and welcome back to Invest in Yourself. And I'm live in person with Bill Fairman, aka Wendy's brother.
Yep.
That's good. So Bill is with CarolinaHardMoney.com, right?
Yes, sir. And by the way, I'm so happy to be with the actual legend and the myth, Larry Goins.
Thank you. Thank you very much. So Bill, or as I like to refer to him as Billy. Billy. So Billy, what do you got to tell us about today?
Well, today I wanted to cover owner financing, obviously, but as the person offering the owner financing, I want you to look at this as a business. You need to look at it as the bank would look at it and qualifying your borrowers the same way the bank does.
Good.
Now, obviously, this is owner financing. These are people that are typically not going to qualify for bank financing. You don't have to be as stringent, but you need to do the same or have the same principles that you would have regardless of whether it's bank financing or it's your financing.
Right.
And the main things that we look at is, do you have the ability to make the monthly payments? So you're looking at income.
Dodd-Frank's going to make sure of that, right?
Well, yeah. And really, Dodd-Frank doesn't come into play with owner financing unless you're doing 3 or more a year. They figure it's a
More than
business.
3, yeah.
But for me, I would still rather be in Dodd-Frank compliance because government is big and they may hassle you regardless. So you still want to have all your ducks in a row. And then,
Right.
you know, if you want to expand your business, you can already do that. And we'll get into that in just a moment. But like I said, the main thing is, do they have the ability to make the mortgage payments? Do they have the ability to bring the money for the down payment? Where's that money coming from? And last but most important, are they willing to make the mortgage payments?
The willingness to pay is the most important.
So that, you know, that comes down to character.
Right.
So the first thing that I would always do when you have a possible buyer is have them fill out a regular 1003. That's what it's called. 1003 application.
That's a Fannie Mae credit app.
Yep. You can get those, just Google them.
Google it.
You can easily get a copy of it. You can even get a copy that is a fillable PDF that you can send to that borrower and have them just type it up, print it out, send it to you. I would also get what's called a blanket authorization form. And what this does is it gives you permission to pull credit, background checks, that type of thing. You're going to do that if you're leasing somebody a property. You might as well do it as well if you're going to
That's right.
finance it.
That's right.
Now, the credit portion, like I said, most of these people are not going to qualify for bank financing in the first place.
They're not
Sometimes
gonna have
just,
an 800 credit score
yeah.
or 7.
You know, and listen, FHA allows a 580 credit score.
Right.
Most banks won't, because if it goes bad, they're going to make them back from them. And so they always add what's called a overlay. So a bank will say, yeah, these are the guidelines that FHA has set aside for us, but we're going to move them up a little bit because we want to make sure that that borrower is a little better than the bottom guidelines
Then the government
say
says
they
they
could
need to
be.
be.
Right. So a 580 score is not awful. And listen, there are plenty of people that got hit during the crash that are deserved folks that, you know, good things happen to bad people all the time. What you're looking for is a pattern on a credit report of non-pay. You know, if they've been terrible for 15 years, likely they're going to continue to be terrible. You know, I was in the wholesale industry for years and years, and
Tell them what that means.
okay. So wholesale is a mortgage broker.
Wholesale lending.
Yeah. A mortgage broker's job is to find, they have a borrower that has certain needs, and they try and find a lender that can meet those needs. Well, I was one of the lenders that would call on the mortgage brokers to get them to use our programs. So I have literally, and I've been doing this for over 20 years on the wholesale side. So I've literally touched thousands of mortgage transactions. And the one thing that I've always heard that just cracks me up is, I know we haven't paid in the last 15 years to anybody, but I promise to pay you.
We're going to change starting from this day
That's right.
forward.
But when you're looking at a credit report, you're looking for patterns. That's what we always looked at. Most companies now just go by the credit score. Back in the day, before the credit scores were there, you looked at the pattern that the borrower had over time, and you can pretty much count on that pattern to continue in the future. So if someone had a blip because of a loss of a job or whatever reason, and then they're back on track, that's the person that you really want. A background check for us really tells the character of the individual.
Right.
When we do a background check, we're looking for criminal, and we're looking for liens, judgments, you know, public records of that sort. If you see a big pattern of always having tax liens, or possibly if they're self-employed and they have a lot of liens on their business, this might not be the person that you want to do financing with. But on the other hand, we're taking everything involved in that borrower's big picture, income, assets, character, and you're looking at it in one big picture. Not one little thing should knock it out. The other, you know, you have strengths and weaknesses in both, and you have to just make a judgment whether that's somebody you would want to lend to. Wendy and I had a customer that had really good credit scores, and this comes to the character and following the rules issue. Great credit scores, good income, good assets. We did not lend to this person because this person does not like following the rules. When we pulled the credit or the background check, this person had 21 seatbelt violations in a year and a half.
Wait a minute, you turned somebody down
Yes.
because they forgot to buckle up.
Not because they forgot, because they refuse to follow the
They
rules.
refused. Okay. I'm with
And everybody has certain rules. Now, our particular business is basically an acquisition loan with a construction component,
you. Right.
and we have certain
Hardly.
schedules that we have to follow and certain rules that they have to follow. And they're telling me that they just refuse to
They can't
conform.
follow.
So
Wow.
anyway, so we backed down on that.
That's pretty brutal. What'd you turn down for? Seatbelt, man.
It all goes to character. So the importance of just checking the borrowers out to see if they have the money for the down payment. A typical bank is going to require 90 days worth of seasoning for the money. You're not going to do that.
You mean you're going to source the funds and make sure they have the money in the bank or have had the money in the bank for 90 days.
And what a bank is doing is that they're making sure that you haven't gone out and borrowed the money for your down payment.
Right.
And then that would add more pressure to your ability to pay the mortgage payment because now you got an additional debt that's being added in there. So that's what they're looking for in that case. And, as an owner financer, as long as you're within, for me personally, if I'm doing this, as long as their debt to what the income is, and they call that a debt to income ratio, as long as you're under 50% of your income, I'm good with that.
Right. And that's for a hard money loan.
Well, for me, that would be good for owner financing as
well. Now, if you're owner financing to an individual that's going to live in it, according to Dodd-Frank, you need to stay around 43%.
Well, there's a little bit of.
That's okay. You can dispute me. It's okay.
I'm just saying there.
Remember, it's my show.
I know. However, there are some others that say if you look and actually translate the language, it just says you have to see that they have the ability to pay.
Dodd-Frank really does. It says they must have the ability.
They don't give you numbers. The banks and Fannie and Freddie have chosen the 41, the 43%. That's their target. But Dodd-Frank doesn't specifically say. They just say you have to prove that they have the ability.
And that has yet to be disputed or has yet to be challenged in a court of law.
Right. Yeah. Essentially, what they're saying is they don't want a loan that has no income requirements.
Right.
Because they had the no income, no asset loans, and Dodd-Frank feels that that's part of the reason that they had the mortgage mill.
No income, no assets, a stated loan.
Now, what they may deem as reasonable or not, that's probably for another court hearing to figure out.
My theory is I don't want to be an example.
Right. Yeah. No, agreed. That's why when you do business in your IRA, there are certain things that you can do, but why would you want to bring up a red flag?
That's right.
When you don't necessarily have to, right?
That's exactly right.
Now, I want to bring this up. If Larry's model essentially is the $100,000 home or less on the owner financing or somewhere in that.
Yeah,
down
typical deals like 69.9, 79.9, 89.9 on the retail side.
And the reason I'm asking this is it comes to financing. If you could get conventional financing for the home that you're purchasing, can you still do owner financing?
Yes.
Right.
Yes, you can.
And the reason I bring that up is if you can get financing for 4.5% conventionally,
that's right,
and then turn around and offer owner financing, you're essentially just guaranteeing the mortgage to the company that you got the loan from, but you can certainly offer owner financing to the person that's buying it from you.
That's right.
The thing that you have to watch out for, though, is a thing called a due on sale clause. So every time a bank gives you a loan, there's a due on sale. It basically says if you sell this property or deed it over to someone else other than the person they made the loan to, they could come back and say, I want all that money back because now someone else owns it and we didn't underwrite that person.
Right.
We want that money back. It rarely ever happens, but you need to know that it's possible.
Well, the good news is selling them on a land contract like we do, you buy the property and you get a mortgage on it, and then you're selling it on a land contract. I still keep the deed to that property, okay? Because there's many ways to do a seller finance deal, okay? Lease option, rent to own, land contract, take back a mortgage or deed of trust. So the way we typically do it is we pay cash for the property, and then we turn around and sell it on a land contract. I maintain the deed. We hire. Now, to digress a minute and get back to what Billy was talking about, is we use what's called our RMLO, Residential Mortgage Loan Officer, okay? And that specializes in seller finance transactions. And I don't take the credit out. I don't have them fill out the 1003. I don't run their debt ratio. I don't talk to them and ask to verify their income or get pay stubs or any of that stuff. I send them to one of the RMLOs. They take the credit out. They qualify them. They make sure that they have the ability to pay. Whether they use 43% or 83%, I don't really care, because they send me a letter stating that this person is qualified as per Dodd-Frank and has the ability to pay for this loan based on the terms and conditions of the sale. So that way I'm out of it. I got my third party piece of paper here over here from an RMLO that is licensed in the state that says these people have the ability to pay. And guess what? The best part is I don't even pay for it. I make my buyer pay for it, okay? Typically, they're going to charge you anywhere from $500 to $1,500. You know, the ones that I use are around $750, something like that. But my buyer pays for it. I don't even pay for it, okay? And then we also turn around and we have a third-party servicer to collect the payments, because there are servicing laws in each state that says what you can and cannot do. And there's even servicing laws that are included in Dodd-Frank. So I don't want to have to deal with that. So I have a third-party servicer, and I could even put in my land contract that my buyer is going to pay the servicing fee, which is typically around $18.50, okay? $12, I believe it's $12.50 for the servicing and around $6 to add escrows, taxes and insurance. See, I make my buyers pay the taxes and insurance in escrow, and I'm not even servicing that deal. I'm having a third party servicer. Then when I sell that note, it's just a simple matter of letting the servicer know, okay, that now when you collect the money, instead of sending it to Larry, you're going to send it to this note buyer over here, okay? And that's why we have so many people that want to buy these notes from us, because I make it simple. It's like turnkey, except it's much easier. With turnkey real estate, you got a tenant in there, but you have management, you have repairs and maintenance, you have taxes, insurance. And with this, there's an $18.50 servicing fee. All you need is a PO box. So
yeah, and the other benefit to that is too is for your borrower. If you're using a servicing company, you sell off a partial of that note or you sell the whole note, nothing ever changes for the borrower. They're still sending it to the same place they've always sent.
They don't even know the difference.
Well,
they do know the difference,
because you have to send them a letter that says so and so now
hello and a goodbye
note, but they still send it to the same place. Nothing changes. Their payment doesn't change. It's a really easy transition. And I'm a big proponent of using third-party outsourcing companies to do this. I'm just explaining what it is that you could go through if you want the brain damage, or you could just that's right, or you could easily hire a third-party company to do exactly what I just told you about. And again, you're not paying for it. Your buyer.
Your buyer is paying for it. And that's the cool thing. That's one of the other reasons I love seller financing. You don't have to worry about property management. You don't have to worry about where the property is. You don't have to find a property manager for Alabama, for Tennessee, for Georgia. You know, you have a servicing company. And I got to tell you guys, I have gone through and I've researched and I've found every national RMLO that works with seller financing, every loan servicer that works with seller financing. And I personally have called and interviewed them and asked them tough questions. And I know who does it in what state and how they do it and how much they charge and all that good stuff. In fact, I've had a lot of people ask me if we would do an event all about seller financing. That's something that we're getting ready to put together. We're still trying to get the details. We want to have a seller finance attorney come in, because I have an attorney close all my land contracts. We're trying to work out the details, so we'll get more about that soon, but we're trying to have a seller finance event where it's nothing but seller financing, where we have one of these RMLOs come in and talk, where we have the servicer come in and talk, where we have an attorney that's going to close. And then my team and I are going to show you how to put all this together. So be on the lookout for more of that. And but also, if you do want to get more information about maybe buying some of these notes, some of these partials that we're creating and earning anywhere from an 8 to a 15% return. We have some 8s, some 10s, some 12s, sometimes some 15s. Just shoot me an email to passiveincome@larrygoins.com. That's passiveincome@larrygoins.com. And I personally will reach out to you. And, don't do it if you don't have any money. If you say, hey, I'm going to borrow the money, or I got somebody going to loan me the money. If you have money and you want to get a good return on your money, then just shoot me an email and I'll be glad to talk to you and see what we can do. You probably need at least, $25,000, $30,000 to get started to buy at least a partial, and we'll help you. We'll help you get started. You'll be working personally with my team and I. So with that, Billy, what else you got?
I was just going to mention that, the note buying part is really a great investment as well. For the passive investor, you're controlling an asset without having to own it or having any of the liability involved. You're just collecting the mailbox money, which I like to say.
No tenants, trash, termites, and toilets.
That's right. That's right.
Mailbox money.
That's right.
That's good. That's
or
awesome.
in the modern vernacular, bank deposit money that you just get a little note that says, hey, by the way, I gave you.
You just got another deposit.
That's right.
That's cool.
So thanks
Billy,
for having me.
Thanks a lot for coming on. I really appreciate it. What's your website?
CarolinaHardMoney.com, CarolinaHardMoney.com.
Only one time is needed. All right, we'll be right back after these important messages with Melissa Floyd. Melissa I see her back there. She's waving. What's up? She's going to be up here to talk about some success stories. So we'll be right back after these messages. Thank you.
Simply the best real estate mentoring by mentors that actually invest in real estate every single day. Join Larry's Inner Circle today and work with us to jumpstart your real estate career or to expand your real estate empire. Come on out to Lake Wiley and work with us in our office side by side, or you can work with Randolph and Paul over the phone. If you're up for it, we'll even send Randolph to your home or office to work directly with you and your team. To find out more and get your free 30-minute investor strategy session with one of our business advisors, you can do so by calling 803-831-2858 or by visiting larrysinnercircle.com. Once again, that's 803-831-2858, larrysinnercircle.com, and it's simply the best real estate mentoring.
Hello. Welcome back to Invest in Yourself, live from Lake Wiley, South Carolina. I'm Larry, and live on the stage today is Melissa Floyd. Melissa, what's happening?
Nothing much.
So what does your shirt say? Stand up and show them your shirt.
Success is a journey to your own destination.
To your own destination. That's awesome. I love that. That's
Thank
great.
you.
Melissa is one of our senior business advisors. Many of you out there have talked to her on the phone and have met her, have talked to her. She comes to a lot of our events. In fact, we're going to be in Houston coming up. Todd, did you mention Houston? Okay, good. He mentioned Houston. I'm sorry. I have to take a break when we have a break. So, right? I got to go out of the room like, what are we talking about next? So, Melissa, you're going to be in Houston, right?
Yep.
What are you going to be doing?
Doing one-on-ones with students and helping them get their business.
One-on-ones with students. Okay, so basically you're going to help them. When we do our events, guys, we have this little sheet. What do we call it?
Maps.
A map, my action plan. Because so many times people go to an event and they get so overwhelmed, they go back home, they're like, where in the world do I start? Have you ever heard that before?
Every day.
Every day. Where in the world do I start? So we have this thing called a map, my action plan. And when we do our events, we bring a few of our people like Melissa, who's been with us many years. How long have you been here?
7 years.
7 years. Oh my gosh. I've literally seen her kids grow up. Can you believe that?
One's a senior this year, by the way.
One's a senior this year. Oh my gosh. That's crazy. Of course, she's seen my kids grow up too.
Yeah.
But so Melissa is going to sit down with you, or she sits down with our students at our events, and talks about their likes, dislikes, strengths, weaknesses, assets, liabilities, where they are, where they want to be, and what's going to be the shortest possible path to getting in there, right?
Yep.
That's good.
Exactly.
That's good. What else do you do?
That's about sums it up. Just helping people take, their business from the beginning to the end,
That's good.
getting their success stories.
That is good. So do you have like some success stories, some people that you work with that you, I mean, I know you do, but every day, because I know you, when I walk by, you're like, hey, Larry, check this out. Hey, Larry, what about this part? Let me tell you about this person. So do you have something you could share with us?
No, a lot of the students are just, interested in how to get their business going, scarcity of getting on the phone. I have one student right now that I'm working with that does all her business strictly by email because she was scared to get on the phone with someone. And she does it at night, sends out a few emails, waits for a response, and she's averaging about 3 deals a month, strictly off emails.
Wait a minute, you can buy a house by email?
Yes, you can.
Man, I want to take that course.
Uh-huh.
Can I call you?
Yeah.
Okay.
803-831-2430.
That's awesome. That is great. That's good. I like that. Buy a house by email. You can buy a house with your smartphone. Literally, you can buy a house with your smartphone, right?
Yep.
That's cool. And
You
she's
don't have
doing
to be
about
riding
3 deals a month.
around or nothing. It's all strictly by her.
No
email.
driving for dollars.
Mhm. Why? It's all online.
Everything is online, isn't
It
it?
is.
And you helped her do it, didn't you?
Yep.
That's why she's a senior business advisor. And that's why she's been here 7 years. And that's another reason that I have so many successful students, because guys, I can't do it on my own. All right. I mean, yeah, I might write the books and all. I don't even write the books by myself. I have people help me format that stuff and typeset and take out all my grammatical incorrections. Whatever that
Make
means.
out that word.
I guess. I don't know. So, because I ain't got no book learning. All right. But yeah, I've got people that help me put all that stuff together. And but I can't do it by myself, okay? But I do know real estate. I know real estate. I know what to do. I know how to do it. And Melissa's been around me long enough to where she knows real estate too. And she's helped many, many, many students. I've seen so many students that like come in here to our office and they're like, hey, Larry, where's Melissa? They're like blowing by me. Where's Melissa? Is Melissa going to be here? I've gone to events where we had an event a while back that Melissa couldn't make it. She was going on some kind of a retreat or something. I can't remember what it was. But she came, we had people come in. Where's Melissa? Where's Melissa? At this event, looking for her, So, and it just blows me away. And it makes me feel really good knowing that I've surrounded myself with people like Melissa that can help our students. And that's the big reason that we have so many successful students. Yeah, the content's good, the information, the books are great, but having somebody like this and all of our other team members to back up the whole organization and education, that's what it's all about, right?
Yes.
That's good. That's good. Are you excited to be here?
No.
Are you nervous?
Yeah.
There's only like 8,000 people right in there looking.
I'm normally not this quiet either.
I know. You get her on the phone, you can't shut her up. She's wide open. So, Melissa, if somebody was out there watching, and yeah, they want to do the seller finance stuff because you know all about that as well. If they want to do the seller finance, or they want to wholesale, or they're like, hey, I own Larry's Filthy Riches, or I own Larry's Ultimate Buy Machine, or his HUD book, or whatever. What do I need to do? How can I get started? What do I need to do to get started? Would you be willing to talk to them and help them, like kind of figure out a game plan or a map?
Of course. Yeah, I do it all day long. I help students figure out a way of taking their business from nothing to, actually cashing those checks. But the biggest thing I really would push out to everyone is coming here to the office and working with you.
No, but you're not
The
a
inner
coach.
circle. No, not a coach. I'm a business advisor.
Business advisor. That's good. That's good. But that's exactly what you do. You're not coaching them. You're not coaching them on real estate deals, but you're helping them decide what path to go down.
Right.
Right? And
Yes.
getting them back in the game. Because so many, you ever see people that get a course and hadn't done anything with it?
Oh, every day. They send me pictures of their bookshelves and they've got courses. I call them about their filthy riches and they don't even know where it's at. Well, how are you going to make money if you don't know where it's at? So, the biggest thing is getting them back active, getting them back up and going and staying on top of them. Calling them, emails, making sure they're doing what they need to do, and then getting them to the level to where they can either come out here and work with you or, us sending somebody out to them or however it needs to be to where we can get their business to the next level.
You get on their case too, don't you?
I do. Don't anybody out there comment about that. There might be comments coming in about that.
But you know what? You get results, don't you?
I do.
Yeah. And that's exactly why she's on the team. That's exactly why she's been here for 7 years, because she gets results. She might get on your case. She might give you a pat on the back when you need it, but she's also going to give you a kick in the butt when you need it. So how can they reach you?
At 803-831-2430.
2430.
Mm-hmm.
Are you going to be back out there?
Yep.
Like live and in person here in just a little bit?
Yes.
What time is it? It's like 12:51. You'll be back there at 1 o'clock?
Yes.
Were you able to eat yet?
No, I think I'm going to go eat.
You're going to go eat?
2 o'clock.
Okay.
Give me
She's
till
going to
2.
go eat. Call her at 2 Eastern time, 9 to 5. She'll be here. Anything else you want to share? I really appreciate you being here.
Thank you.
Thank you so much. Appreciate you. We're going to take a quick break, and we're going to come back with Nathan Amaral. Or are we taking a break? Yes, we are? Okay, good. I didn't have the sheet here in front of me, so. I see we do have break on the sheet. So we're going to take a quick break, and we'll be back with Nathan Amaral live and in person. Live action. We'll be right back.
Larry Goins is coming to Houston, Texas for our next 3-day training extravaganza. It is 3 days of intense training with Larry and our team of professional investors. Learn the same strategies we use in our investment business every single day. The industry is constantly changing, but Larry has your back with the latest on the markets and what you need to do to take advantage of it. This 3-day training event is free for all owners of Larry's real estate courses, including the Ultimate Buying and Selling Machine, Filthy Riches, Real Estate Day Trading, or HUD Jumpstarts, and the Bib Blaster. Find out more today by calling 803-831-2858 or by visiting LarryGoinsLive.com. Not a student? Not a problem. Call one of our business advisors today at 803-831-2858 to see how you can attend our upcoming 3-day training event in Houston, Texas.
Hello, and welcome back live in person to Invest in Yourself, live from Lake Wiley, South Carolina. I'm Larry Goins. And
I'm Nathan Amaral.
And he's not. He's Nathan. I'm Larry. Nathan, what's going on?
Hey, Larry, how you doing?
I'm doing good, man. I like those shirts.
Thank you, appreciate it.
You wear those kind of shirts every day.
Almost every day.
Stand up and show them.
Oh, okay, it's today's shirt day. If you haven't noticed, we've been showing off each other's shirts. So
I know, right? Don't ever do that again. So, how's the wife and baby?
They're doing well. Yeah, doing well. Baby's. I was ready to say, she's walking. Not the wife, but
My wife is walking
and
now.
and she's talking now. No, she's 11 months actually today. She's 11 months, yeah, and she's walking and talking, walking around the house. Now it's like, where's Brooklyn? Where's Brooklyn? It's not. She's not stationary in one.
Yeah, no, you can't keep her down.
No.
That's pretty
It's a
wild.
good time. Yeah, now she's going through cupboards, and now we got those child-proof locks on cupboards and all that stuff.
Do you have a leash on her or anything?
No, not yet. Not yet. I just ordered one on Amazon, so it should be here in about 2 days.
That's good. That's good. So Nathan works with us, and he's an author. He's a trainer. He does a lot of training and educating himself on motivation, business, sales, negotiating, all different kind of things like that. And he also works with our business advisors to help them to lead the students down the right path. So, Nathan, what do you have to share with us today?
Today, it's a little bit about, again, it's more mindset, but in a specific niche, since we're talking about seller financing, I deemed it appropriate that two most important topics is the conversations you have with yourself and your buyers. So I wanted to share a little bit first about the mindset with buyers that you should have, and also your mindset with yourself, and both relating to money. So to start it off, to kick it off, is the mindset with buyers. And when you start a phone call with your buyers, people calling in to ask you maybe how much is the property, or to get more information. The important thing is that you are on the leading front of that. You take control of the conversation, and you do that by asking questions. You always want to be asking questions first to stay in control of that conversation. If you kind of like spill the beans all out and you're doing all the talking, then you're not doing what's the most important thing in sales, is listening with both your ears instead of talking. So
2 ears, 1 mouth.
Yeah, that's really important. And you got to ask questions first. You got to be the one asking those questions so you can stay in control. An important thing to do that, especially in seller financing, is when you're asking your questions, and you can get all those questions in Larry's courses, is especially when you're asking about money, right? When you're asking for, let's say, down payment, or maybe you're going to a lender. You want to be able to ask those questions about money and get very comfortable with it. You have to. And if you have to try something like maybe, asking a family friend, a family member, a friend, maybe doing it in the mirror or something like that, something that you get comfortable with asking for, like 10,000, 20,000, 50,000, 100,000, whatever it may be for you, whatever you feel comfortable with at first, do that and get used to that. Then you got to increase your limits. You always have to raise the bar for yourself in your life, and also in your conversations. You have to raise the bar for how much you're asking for, whether it's down payment for a loan on a property or from investors. But it starts with your mindset and how you see money and how you think about money. And that's the part where the mindset comes with in part 2 of this conversation. Is first you have to understand and decide, like, what's big for you. Like, what's a big amount? Over the years, I've worked with a lot of people that, when you say something like $5,000, they're like, whoa, $5,000. But to some other people, $5,000 is an electricity bill, right? To some people,
A mortgage payment.
A mortgage payment. Yeah. I mean, so you have to understand the type of people that you're working with, and that big to you may not be big to them. So what's important for yourself is knowing what is big for you. What's the most you've ever asked for? What seems large, like, wow, this is a lot of money. When you have that, when you know what that bar is, that exact amount is, you have to challenge yourself and say, well, what's stopping me from getting more? And we just recently had this conversation, actually just a few days ago, about, actually I'll share the procedure you should try, is get a blank check. And what you do with that blank check is you write down a dollar amount in that check paid out to you, and you write down a dollar amount in that check for the biggest check you've ever, or you would want to receive, that you've never received before, but that you would want to receive. And, we got a bunch of different responses. We got all different types of numbers, and some are smaller, some are bigger. But the important thing is to know that in order to start the whole process, it starts in your mind. It starts with you setting the bar first of what's a big amount. And it's okay if you think $1,000 is a lot of money right now. It's okay if you think $10,000 is a lot of money right now. What's important is that you stretch your mind, and by doing that, you can take that exercise by using the blank check and filling it out, making it out to yourself, or repeating this to other people. And it'll help you ask for more money and ask more questions to other people.
That's good.
Yeah.
Can I throw one thing in here?
Yeah.
I remember years and years ago, and it's kind of funny you're talking about this, how much is a big amount to you, and what do you feel comfortable with, and what is a stretch? I remember years ago, but this was back in the 80s, I was thinking, I remember thinking this specifically, I'm cool dealing in $100, like 200 here, 300 there, 500, 800, whatever, whether I'm buying or selling or whatever, or, I got 500 in the bank, I can go spend 300 on this or whatever. And I remember thinking, I want to get to a point where I can do that with 4 figures, $2,000, $3,000, $5,000, $7,000. And then I want to get to the point where I can do it with 5 figures. Then I want to get to the point where I can do it with 6 figures. Then I want to get to the point where I can do it with 7 figures. Okay. So I remember thinking specifically about this, being comfortable in trading here and there and all that. And I remember getting to the point, I opened up a Schwab One account. Now, I don't think they even have an account called Schwab One anymore, but it was like a checking account, but it had a debit card with it. And it was, I remember I was so excited. I put like $5,000 in that thing because that's what you had to have in it. So I put and I had this Schwab debit card. I'm like, and that just showed me I had $5,000 in there because you had to keep $5,000 in there. Okay. And I was like so thrilled. This was back in the 80s. Mm-hmm. I was so excited. You earn a little bit of interest. It wasn't much, but it was a little bit of interest. It was more than it is now. They're paying 1% now, right? Yeah. So, but anyway, and then I remember getting to the point where I was dealing in 10,000 here, 20,000 here, 40,000, 60,000, whatever it is. And then I remember I'd forgotten about this for a long time. And I remember I was out of town and I asked my wife, this was a long time ago when we used to have to go pick up checks, certified checks, and take them to closings. We didn't do wires. So I remember I was out of town and I called my wife and I said, honey, I need you to go over to, back then it was First Union, before it was Wachovia or now Wells Fargo. I need you to go over to First Union and I need you to get a certified check. I think it was like $250,000 or something. And I need you to take it over to this attorney for this closing. And she said, okay, I'm writing this down. Okay, 250, and it was a specific amount. I don't remember, like 258,000, whatever. Okay, good. I got it. Okay, great. By the way, what is this for? That was the last thing she asked me. So I'm not telling you that to impress you. And I'm not going to say I'm telling it to you to impress upon you either. But I'm telling it to you so you can get to the point where you're dealing in 4 figures, 5 figures, 6 figures. And you and your family get used to dealing in that stuff. Because that was like kind of an afterthought to my wife. Oh, by the way, what are we buying? So I told her what the property was or whatever. And, I'm buying it for this. I'm selling it for this, whatever. So I want you guys to think about that. And what is your number, like Nathan was talking about? And get to the point, if you're comfortable in dealing in 3 figures, $100, $400, $300, get to the point where you can deal in thousands, and then tens of thousands, and then hundreds of thousands, and eventually millions. And you can do it, but it all starts from right where you are. You're not going to go from hundreds to 6 figures, but you can work your way up. Right, Nathan?
Oh, yeah, absolutely. Everything Larry just said is so true. You have to start with the end in mind first and knowing where you want to go. Even write it down. That's why I use that check example, that blank check example you fill out. If you write it down, it puts those thoughts in motion. And then just ask yourself every day or once a week, however you want to do it, but ask yourself on a regular basis, what can I do today to get myself one step closer to this goal? And that will definitely increase that progress.
That's awesome. That is really good. Nathan, thanks a lot for sharing that.
Yeah,
That's
absolutely.
really good.
Absolutely.
I think we have some questions that have come in. So as like every Invest in Yourself, we do like to take your questions. So Todd, the man behind the mic, is going to read out a question, and Nathan and or I will answer it for you.
Okay.
This question is from Keith. Would you suggest buying and selling owner finance properties in an LLC or S Corp?
Yes and yes. There are differences between an LLC and an S Corp, and the only person that can really tell you the differences for you is your own personal CPA or accountant. If you don't have one, I'll be glad to turn you on to mine. I use Smith & Shin down in Greenville, South Carolina. smithandshin.net, I believe it is, but if you just look them up, Keith Shin and Brandon Smith, and they do all my stuff, and they can tell you, I talk about them in all my books. They're great guys. They know real estate. They only work with real estate investors. So you should use either an LLC or an S Corp, unless they would tell you something different. but I definitely would not do a sole proprietor or your own personal name, just for liability purposes.
Yeah.
Anything you want to add to that?
Well, absolutely. I would talk to a professional, either get with Larry or someone that you can like and trust in either in your area or in the market that you're doing business with, but definitely talk to a professional.
Absolutely. Cool. Hope that helped.
All right, this question is from M. Why would you discount a note as much as you did in your earlier example?
Oh, wow. Why would I discount a note? I gave one. I think what they're probably talking about is I took back a $70,000 note and I sold it for $38,000. I think, and I know that we got a great deal on the property. We stole the property. We paid 14, whatever it was, 950 or 450, something like that. But we sold that note for 38,000, which was a 20% yield. I think I just felt bad because it did have a few holes in it. It had a couple weak spots in the floor, and I didn't want my passive note buyer to be in it more than I felt like the property was worth. I wanted them to have a really good deal in case the people moved out and they were going to have to resell it or put somebody else in there. But bottom line is, hey, I'll put somebody back in there for you. It's so much easier to sell houses with owner financing. You wouldn't believe the people that come out of the woodwork that have $5,000, $10,000, $15,000 to put down on a house. And let me tell you something, the more they put down, the longer it's going to take them to walk away if they do walk away. And if they do walk away, my personal opinion, it's the best thing that can happen. Now, don't get me wrong. I want people to finish paying. I want them to become a homeowner. I want them to be able to own that house free and clear. But in the real world, not all of them do. And that's actually where you make more money. If they stop paying, you put somebody else in the house and they put another $5,000 down. So that's how you actually make even more money. So just personal opinion, I just didn't want to sell that note. I could have probably gotten $50,000 for that note, but I just wanted to give a really good deal to the note buyer because of the condition of the property was a little less than what we originally thought. So that's why I did that. But most of our notes are 10, 12, sometimes 15% return.
What are the tax consequences of selling with seller finance? Are there any long-term or short-term capital gains?
Well, that's a really, really, really good question, okay? And that's really one that you probably need to talk to your CPA about. However, I'm going to give you the short version here, all right? When you're buying and selling, like you're wholesaling, you are a dealer, okay? You are a dealer. You're buying and selling and buying and selling and buying and selling. The way we sell them on land contract. We're buying, the deed stays in our name, and we are selling them with seller financing, but it's a long-term investment. And there are cases and CPAs out there that have argued that we are not a dealer, okay? And it's a long-term investment. So we're taking what's called the installment sale, okay? You take the installment sale and you're able to pay the taxes on the money as you receive it. But once again, everybody's situation is different, okay? It's also very important that if you're doing buy and sell and you're doing buy and hold or buy and seller financing on the land contracts, you want to make sure you have those entities separate. That's another thing that your CPA will tell you that's going to make the difference between you being a dealer and paying capital gains, ordinary income versus being an investment and paying long-term capital gains, taking the installment sale versus short-term capital gains and paying the taxes on it whenever you sold it, even though you didn't collect the money. So I hope that helped to a certain extent, but the bottom line is talk to your own personal advisor.
All right, we have another one here from Glenn. What are the seasoning requirements to sell the note?
Well, let me ask you guys a question. If I have a property that I just sold for $69,900 and they put $5,000 down, now I have a $64,900 note, okay? And I brought that note to you for $45,000, and you know that property is worth at least $55,000, $60,000, something like that. How much seasoning do you want? Okay, I tell you this, I sell notes all the time. I sell some of them the day I buy them or the day I sold the property to the land contract buyer with no seasoning, okay? If you're gonna sell it to an institution, okay, a big company that they require 3 to 6 to 9 months, sometimes 12 months seasoning, that's fine. You can sell those notes, but I sell them right away. And I sell them to people at an 8, 10, 12, sometimes 15% yield, okay? And I have not had any complaints whatsoever, okay? And they're getting a great return on their money.
Joseph just asked, how much money can I make as a percentage-wise as an investor with a large amount of money?
How much can you make as a percentage-wise? Okay, well, it depends on two things. Do you want to be a passive investor and just buy notes from someone like me? Or do you want to go out there and make 100 offers to get a deal, then advertise that deal, put it out there, find a land contract buyer, put them in it, set up, get them approved through an RMLO, get them set up with a servicing company, okay? That's two different things, okay? If you want to be a passive investor and just write a check, then call me. I'll help you, okay? We've got deals anywhere from 8, 10, 12, sometimes 15% return. However, if you're going to do all the work yourself, you could, in some instances, get 25, 30, 40% return on your money. You could actually get an infinite yield on your money. Think about this. Say if I bought a property for $40,000, okay? Or I've got 40 in it, but I sold it with seller financing, and then I turn around and sell just enough of that note to get my $40,000 back, then my investment in that deal is zero, but you're going to collect the payments on it for the first, say, 5 years. Maybe I sold you the first 5 years. You're going to get 12, 15% return on your money for the first 5 years. And then after that, I collect the last 15 years. Okay. I'm getting nothing up front. I'm not making anything up front, but my yield is infinite because I have zero invested. So it's really kind of a two-part answer. If you want to be a passive investor, you can make 8, 10, 12, 15%. If you want to be an active and go through and make hundreds of offers like we do, negotiate the deal, go out there and look at it, make sure it's livable, get inspections, get all this stuff, then you can make up to infinite yield, but you're doing all the work. I hope that helped.
All right, we do have a question from Camerly. On the land contract, do you pay the taxes and insurance?
No, my buyer is escrow through the servicing company for the taxes and insurance. So if their payment to me, say their payment to me is $600, I always tell them there's going to be probably another $100 to $150 over that. So it might be $700 to $750 that the servicing company is going to collect. And then at the end of the year, when the tax bill comes due and the insurance comes due, the money is in that escrow account to pay for the taxes and the insurance. Good question. That's very good.
All right, we do have one here from investor. Which RLMO and servicing companies do you use?
Well, there's a lot of them out there. It would take too long to go through the whole list. I do have a lot of them out there. One of the things that we're hoping to do is put this seller financing event together, and we're actually planning on having one of the RMLOs come to the event and explain exactly what the process is and how it works, and how you don't have to do anything other than put your buyer with the RMLO and they do all the work. It's really cool. Nathan, I know you do a lot of seller finance deals.
Absolutely.
And you use RMLOs, some of the ones that we've talked about that we've interviewed, as well as the servicing companies as well.
Absolutely, yeah. It makes it a lot easier when you can bring the two parties together and bring, or I guess, more pieces of the puzzle together, so that instead of you trying to do all the work yourself, you can bring the right parties together and then streamline it for you.
Do you mind sharing about that deal that you did a little while back?
Yeah.
When you got a lot of down payment.
Yeah.
Tell them about that deal. That was huge.
Sure, yeah, and it kind of ties into what I was talking about earlier about mindset. Because some people are comfortable with getting 5,000, whatever, or 10,000. That's fine. But remember, it's all about raising your stakes. So the first deal I did on seller financing, I got 5,000, but I said, you know what, I got to raise the bar. So then I set my goal for 20,000. And so I got a bunch of people calling in. I think I averaged.
How much did you pay for the property?
30.
He paid $30,000 for the property.
Yep. And so when I put the ad out, I got about 32 calls that came in, and I got anything from $2,000 down to as high as like 17. But then this one person called in, and I got it. it was 23,000. And then we ended up settling right around 18.5 for the down payment because they needed some moving money because they're moving from out of state down over to the property. So we negotiated around 18.5. And again, that was raising the stakes because I had never gotten that much for a down payment on a property before. And then to put everything all together, I talked to the attorney and the loan servicing company, did a three-way call, merged the two. I did all this sight unseen. I actually haven't even met that attorney before, so in person.
And never went to the property.
Never went to the property, yeah. And then I put them all together on a conference call. They all met. They all were willing to do the work virtually, and they got it all done because the loan servicing company is on the other side of the country. So, but they put it all together, and they were willing to do it, and they got it done.
That's awesome. So you had about 11.5 in the property.
Yep.
Plus closing costs or whatever.
Yep.
And how much are they paying you a month?
I think it's off the top of my head. I know I'm at it's got to be like $600. Yeah, because after fees and everything that comes out, so it's about
From the servicing,
from the servicing. Yeah, it's like
because
$5.
they charge about $18.50 per month.
Yeah, so it's going to be anywhere between like $580 or something like that for that deal.
That's awesome.
Yeah,
that's a great deal. That was when he told me that he got almost $20,000 down. I'm like, wow, that's really rich. That's good. And you just raised the bar. That's all.
Yeah, I just raised the bar.
You asked for it.
Yeah, I asked for it. Yeah, and I'd never done that was probably my third or fourth deal in seller financing. I had never done seller financing before. I was always in wholesaling, dabbled in a little bit of apartments, stuff like the Section 8 stuff, but never did seller financing until I just found this little niche. And I was like, wow, this, it seems pretty lucrative. And thanks to Larry, because he's always talking about filthy riches. So I just said, you know what, I'm going to jump back into this, and I really like the model. It's really good. It's a great model.
That's cool. That's cool. And you're just building your book.
Yeah.
You're building a book of business.
Exactly.
It's kind of like, I kind of like to relate it to like an insurance company, an insurance agent. They're building their book of business, okay? Building their book of residuals. And that's all we're really doing with houses.
Yeah. And it's really, because we took that drive, and I remember that woman that said, when you're in the business, it's going to happen automatically that people are going to start coming to you. I remember that girl. She's like, "Oh, I'm looking for a place. Can you take down my name and number?" I said, and then I immediately asked the question. She didn't say how much I need. I asked her, well, how much do you have to put down, right? So again, it comes about to how much do you have, and asking the questions, being in control of the conversation. So
that's awesome. Yeah, we took a road trip a few weeks ago and went out and looked at some properties and stuff, and was training a new guy. So it was really cool. We were out putting out all of our owner finance signs around these houses. And one of the things that happened was we were showing this one house to this guy. He didn't like the house, but he had about, how much did he have, 10 or 15 to put down?
I think it was 15.
Yeah. Something like that. Yeah. So he had whatever it was, 10 or 15 to put down, but he didn't like this house. But so what we did was, okay, what are you looking for? Well, I want to be in this city, and I want my payment to be this, and I need at least X number of bedrooms, X number of baths, X square footage, whatever. I said, how about a double wide? You okay with that? Oh, yeah, I'd love a double wide. Yeah, I don't know, an acre of land somewhere. So now we're working on making offers on properties in that area to find him a house, because we already got our buyer lined up. Yeah, exactly. All we got to do now is go get a deal. And Riley's in there working it, and he's trying to find him a deal.
Yeah. Yeah. Find the need first and then fulfill it.
It's much easier to find a house for a buyer than a buyer for a house. Right. What else you got, Todd?
We got quite a few more questions here flowing in. We got one from Sequoia. What is the easiest way to get started with little or no money?
Filthy riches. Get the filthy riches training. Okay, that's going to show you everything in that course. Is going to show you how to get not only the money for your deals, but the money for the down payment. Everything. So you can work with FSBOs, put out bandit signs, run Craigslist ads, look for properties on eBay. What else, Nathan? There's a ton of realtors, realtor.com. Yeah. Oh my gosh. There's tens of thousands of properties on realtor.com. That's where we get a lot of property. HUDhomestore.com.
That deal that we talked about, I ran all Craigslist ads. That's it. That's all I ever do, actually. I only run Craigslist ads, and that's how they come in. So
there you go. And if you need to sell a few of them to get your money, go to your local RIA group, run some Craigslist ads about selling the notes, have your note buyer lined up, so whenever you go to buy the property, you sell it and sell the note at the same time. That way you're doing a simultaneous transaction. You use your note buyer to pay your seller, and your buyer, your land contract buyer, is right there in the middle. There you have it.
All right, we have a question from Nina. Do you require a non-refundable deposit before the client commits to the agreement?
Okay, I do have them put up a deposit, okay? It's typically twice of what I put up. If I'm putting up a $500 deposit, I want my buyer to put up a $1,000 deposit, okay? And if for some reason they do not qualify based on Dodd-Frank, they don't have the ability to pay, it is fully refundable, okay? We tell them it's not otherwise, but I do this so they're just not being squirrely and try to back out of the deal. But I don't keep people's deposit unless it's an investor that goes past their due diligence period and they're dragging on, and then just all of a sudden at the end decide that they don't want to buy the property. And it's not any fault of their own, in the sense that if it's not any fault of their own, I give them their money back. But if it's an investor and they just drag out to the end and then say, oh, I changed my mind, then I'm keeping their money. Okay.
All right, we had a quick question I can answer. Shaw asked, is this recorded? And yes, Shaw, it is. It'll be up on our YouTube channel shortly after we finish the broadcast here. And also, every episode of Invest in Yourself is now on iTunes. So if you use iTunes, you can download entire episodes or single segments for any of our shows. The next one is from Niels. Do you have a software that figures out the numbers for making the note?
Yes, we do. We have a very nice little spreadsheet that Paul, who was in the first segment, he put together, and we're tweaking that right now. And our plans is to make that available to our students, especially. We're probably going to unveil it at our Nothing But Seller Financing event, and show you how to use that. And Paul's going to be there as well, teaching all about that and about marketing the properties, because we have these things sold by the time we have to buy them. Okay. It's the simplest thing I've ever seen to sell one of these seller financing houses. What do you think, Nathan?
Yeah, absolutely.
I mean, it's just, it's much easier to find somebody with 5, 10, 15, 18, 5
It is.
than it is somebody that has $50,000 to buy the whole house.
And I think you save yourself a lot of headache when you go higher if you start lower, okay? There's a lot more headaches at a lower dollar amount than there is with someone has more money. So as an investor, that's what I'm saying, prepare your mind, get ready, state your numbers, know what you're looking for, because you're going to have a lot more headaches later on if you start low, if you rather just go high, and it's a lot easier.
You know, that's so true. Just real quick, when I was a stockbroker back in the 80s, somebody would send me $5,000 to invest in a stock. Man, they were calling me every week. What's going on in the stock? What's happening with the stock? You know, we had people that would write a check for $200,000, $300,000, $500,000. You'd never hear from them. Okay, the smaller the amounts, the more they're going to aggravate you. You know,
It's so true.
That's crazy, right?
It's so true.
It is.
It's so true.
What else we got?
What note rate do you use for owner finance notes that will yield 8%?
Well, I use primarily 9% for 240 months. Okay. I will lower that rate a little bit if the term is shortened and they can handle a higher payment. Like, for example, I might use 8% and 180 months, or 9% and 240 months. Now, in the Filthy Riches course, I talk about 11%, but you know, I have kind of gotten away from that. I have lowered that to 9%, but usually whenever I pay an 8% yield on a loan, it's when somebody is loaning me the money, okay? Because it's a little different than buying a note and getting an 8% yield. If you're loaning me the money, for example, maybe I got a deal, I'm in it for $40,000, and I sold it on a land contract for $80,000. I got 10 down or whatever. I could sell you the note, but if you just want to loan me the money secured by the note, that's when I pay 8%, okay? Because you've got me backing up the note. So, but other than that, it's usually 10 to 12, sometimes 15% yield.
All right, unfortunately, we only have time for one more question. I will say, if we did not get to your question, just please give us a call at 831-2858, and one of our advisors will be more than happy to help you. But we have several people who've asked this question. Will you be covering seller financing in detail at your Houston event?
I will be talking about seller financing, and the majority of it is on the third day. However, it's not a seller finance specific event. We are working on creating a nothing but seller financing event. And in fact, if I'm not mistaken, I mean, I hate to give away too much stuff, but if I'm not mistaken, we already have a hotel booked for that. Is that right? In October?
It's going to be October 22nd and 23rd, I believe, a Friday and a Saturday.
Okay.
In Charlotte, North Carolina.
Good.
We do have the venue booked.
Good.
We are just waiting on a couple of contracts to return before we can announce it officially.
If you guys are familiar with my Nothing But HUD event, it sold out long before the event, and it was just content only, just my team and I teaching and training the whole time. And this Nothing But Seller Financing event is going to be the exact same way, where we're only going to talk about seller financing. We're going to show you what we're doing, how we're doing it. I'm going to bring my team there and show you what we're doing and how we're doing it. You're going to have forms, documents, spreadsheets, our analyzer, everything about the seller financing. And we're still in the process of putting together all the details. I wish I had a link I could give you. I wish I could tell you to call to register right now, but I can't. But I do expect it to be even more highly anticipated than the HUD event. And the HUD event sold out long before it was ever close to the event. So just be on the watch out, be on the lookout for it. We'll be sending out emails and stuff like that about the Nothing But Seller Financing event. Good. So with that, I really appreciate you guys watching. Appreciate all of you being on here for the long time here. This is probably the longest one we've done, isn't it? Or is it? I don't know. Maybe so.
Maybe the first one was longer.
Yeah, maybe the first one was longer, but this was good. You guys have a lot of great questions. That tells me you're really engaged. You're really enjoying it, getting a lot out of it. So I really appreciate you guys being on, watching Invest in Yourself. We do it once a month right now. So I'm really looking forward to hearing your feedback. Please go out there and post feedback on the YouTube page when we get that up. And your comments, questions, you can feel free to call our office, talk to Melissa or any one of our business advisors, 803-831-2858. So with that, this is Larry Goins, reminding you to go out there and invest in yourself. See you next time.
See you.